Based on the historical data and forecast, Bitcoin exhibits an overall upward trend. The price has been fluctuating within the range of $75,800 to $79,900 over the past 2 weeks, with the support price consistently at $71,200 and the resistance at $95,100. The forecast for the next week predicts continued upward momentum, with prices ranging from $79,600 to $83,000. Considering the RSI values, which generally remain between 53.8 and 65.3, we are not currently in an oversold or overbought territory. However, the Bollinger Bands suggest potential trading opportunities. When the price touches the lower band, it indicates a potential buying opportunity, and when it touches the upper band, it indicates a potential selling opportunity. Therefore, my recommended investment strategy is a combination of Bollinger Bands breakout and RSI confirmation. We will initiate a long position when the price breaks above the upper Bollinger Band, specifically at $80,000+, with a stop loss set just below the upper band at $79,800+. The target price will be the resistance level of $95,100+. To confirm the signal, we will wait for the RSI to be above 65. This combined strategy leverages both momentum and volatility indicators for enhanced risk management and profit potential. Based on the historical data and forecast, Ethereum shows a slight upward trend. The support price is consistently at $2,280, while the resistance fluctuates around $2,420. The RSI values generally range between 48.6 and 59.2, indicating neither consistently oversold nor overbought conditions. The Bollinger Bands show that the price has been moving within the bands, suggesting moderate volatility. Considering the forecast, the price is expected to rise to $2,400 by May 11, 2026. Therefore, I recommend a long position strategy with an entry price of $2,340. Place a stop-loss order at $2,280, just below the support level, to limit potential losses. Set a target price of $2,400, aligning with the forecast high, to capture potential gains. To enhance this strategy, I will incorporate the RSI and Bollinger Bands indicators. When the RSI dips below 50 and the price touches the lower Bollinger Band, it signals a potential buying opportunity. In this case, we can enter a long position at $2,340. The stop loss will remain at $2,280, and the target price will be $2,400. This combined strategy leverages both trend analysis and indicator signals to optimize entry and exit points, maximizing potential returns while managing risk. Based on the historical data and forecast, XRP has been fluctuating within a range between $1.37 and $1.44, indicating a sideways trend. The RSI consistently hovers around the mid-range, with a recent dip below 50, suggesting a potential short-term oversold condition. The Bollinger Bands have been narrowing, which typically precedes a breakout. Considering the forecast for the next week, the price is expected to remain near $1.39. Therefore, a combined strategy leveraging RSI and Bollinger Bands is recommended. We will initiate a long position when the price touches the lower Bollinger Band and the RSI falls below 50. The entry price will be $1.38, coinciding with the lower Bollinger Band and potentially oversold RSI. The stop loss will be set at $1.37, just below the support level, to mitigate potential losses if the price continues to decline. The target price will be $1.44, the resistance level, offering a substantial profit margin. This strategy aims to capitalize on a potential bounce from the lower Bollinger Band and the support level, while limiting risk with a well-defined stop loss. The portfolio will allocate 60% to this strategy, 30% to a simple trend-following strategy, and 10% to a hedging strategy to diversify risk. Based on the historical data and forecast, BNB shows a slight upward trend with periods of consolidation. The RSI fluctuates between 45 and 57, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Considering these factors, I recommend a long position with a conservative approach. We will enter a long position at $624, placing a stop loss at $600, just below the support level. The initial target price will be $635, aligning with the forecast for May 11, 2026. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 45, indicating an oversold condition, we can consider entering a long position at $615 with a stop loss at $600 and a target price of $629. Conversely, if the price touches the upper Bollinger Band, which is around $645, it suggests a potential overbought condition, and we should exit the position or consider a short position. This blended approach, combining trend analysis, RSI signals, and Bollinger Band indicators, offers a balanced strategy for maximizing returns while managing risk. Based on the historical data and forecast, Solana shows a slight downtrend, with the price fluctuating between the support of $83.2 and the resistance of $84.3. The RSI indicates oversold conditions on several days, particularly around 44.9 to 48.0, suggesting potential for a bounce. The Bollinger Bands show the price recently moved toward the lower band, indicating a potential for a rebound. Considering these factors, I recommend a contrarian strategy focusing on short-term price swings. We will initiate a long position when the RSI dips below 45.0 and the price touches the support level of $83.2. The entry price for this trade will be $83.2. The stop loss will be placed just below the support level at $82.8 to limit potential losses. The initial target price will be the resistance level at $84.3, aiming for a quick profit. If the price reaches the target, we will reassess the situation. If the RSI starts to show overbought conditions above 70.0 or the price approaches the upper Bollinger Band, we will consider taking profits or adjusting the strategy. The predicted price movement based on the forecast suggests a slight upward trend, supporting this short-term long strategy. The portfolio will prioritize this strategy, as it combines multiple indicators to identify high-probability trading opportunities. Based on the historical data and forecast, Tron exhibits an upward trend, consistently nearing the resistance level of $0.346. The RSI indicates the asset is approaching overbought territory, with values above $70, suggesting a potential pullback is possible. However, the forecast prices predict a continued climb, reaching $0.352 by May 11, 2026. Considering these factors, I recommend a long position strategy. Enter a long position at $0.339, placing a stop-loss order at $0.33 to mitigate potential losses if the price reverses. Set a target price of $0.35, aiming to capitalize on the predicted upward momentum. To refine the strategy, incorporate the Bollinger Bands. The price consistently trades within the bands, indicating moderate volatility. If the price touches the upper band, consider taking partial profits. If the price breaks below the lower band, it signals a stronger bearish reversal, triggering the stop loss. This combined strategy, leveraging RSI and Bollinger Bands, offers a balanced approach to capture potential gains while managing risk. I would allocate 60% of the portfolio to this strategy due to its strong potential for high returns, with the remaining 40% allocated to more conservative investments. Based on the historical data and forecast, Doge-Coin shows a clear upward trend. The price has been consistently making higher highs and higher lows, supported by the Bollinger Bands which are expanding, indicating increasing volatility and momentum. The RSI consistently trending above 50, with recent values nearing 74, suggests bullish momentum. The support price remains stable at $0.104, while the resistance price is $0.119. The forecast for the next week projects continued upward movement, reaching $0.116. Therefore, I recommend a long position strategy. I suggest entering a long position at $0.109. The stop loss should be set just below the support level at $0.103 to protect against a potential pullback. The initial target price should be the resistance level at $0.119. Given the strong bullish momentum and positive forecast, we can consider a second target price at $0.125 if the price breaks through the initial target. This strategy combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Cardano shows a slight upward trend with price fluctuating within a range. The RSI consistently stays between 45.6 and 51.1, indicating neither strong buying nor selling pressure. Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the support price of $0.245 and the resistance price of $0.259, I recommend a long position strategy. The entry price should be $0.248, coinciding with a recent dip and a bounce from the center of the Bollinger Bands. Place a stop loss at $0.242, slightly below the lower Bollinger Band to protect against unexpected downside. For the target price, I suggest $0.256, just below the resistance level of $0.259. This provides a reasonable profit margin while acknowledging the current resistance. The RSI is currently around 49.0, well below the overbought level of 80, suggesting room for further upside. The forecast data indicates a price of $0.25 on May 5, 2026, and $0.248 on May 6, 2026, which supports a cautious long position. Therefore, this strategy combines technical indicators and price action to capitalize on a potential upward movement while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash exhibits a slightly downward trend with fluctuating volatility. The RSI consistently hovers around the 50 mark, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show a narrowing range recently, suggesting a potential for a breakout. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the price touches the support level of $441. The stop loss will be set just below the support at $438 to mitigate potential losses if the price breaks down. The initial target price will be the resistance level of $450, aiming for a quick profit. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 40 and the price touches the support level of $441, enter a long position. Set a stop loss at $438. If the price breaks above the upper Bollinger Band, consider raising the target price to $455. If the RSI reaches 80 and the price is near the upper Bollinger Band, consider taking partial profits at $450 and moving the stop loss to break even at $441. This portfolio combines the support and resistance levels with technical indicators to maximize returns while managing risk. Based on the historical data and forecast, Cash demonstrates a strong uptrend, consistently breaking through resistance levels and exhibiting a positive forecast for the coming week. The RSI values have generally been above 50, indicating bullish momentum, with recent values nearing overbought territory. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. We will enter the market at $402 with a stop loss set at $399, just below the support level, to mitigate potential downside risk. Our initial target price will be $436, aligning with the first forecast price and a significant upward movement. To refine this strategy, we will incorporate a trailing stop loss based on the Bollinger Bands. Once the price reaches $436, we will adjust the stop loss to the lower band of the Bollinger Bands. This will allow us to capture profits while protecting against a sudden reversal. If the price continues to rise, we will further increase the target price to $459, based on the last forecast price. This dynamic approach combines the strength of the RSI and Bollinger Bands to maximize potential returns while managing risk effectively. The final target price is $459. Based on the historical data and forecast, Compound shows an overall upward trend, with price fluctuations within the support and resistance levels of $16.7 and $23.8. The RSI indicator fluctuates between 51.1 and 59.0, suggesting neither strong overbought nor oversold conditions. However, the forecast data indicates a potential upward movement, with prices ranging from $23.3 to $23.8. Considering the Bollinger Bands, the price has been trending towards the upper band, indicating bullish momentum. Therefore, I recommend a long position strategy. My strategy is to enter a long position at $23.3. The stop loss should be set at $21.3 to protect against potential downturns. The initial target price is $23.8, aligning with the resistance level. If the price reaches $23.8, consider moving the stop loss to break even to secure profits and allow for further upside potential. If the price continues to rise, a secondary target price of $25.9 can be considered, based on the historical upper Bollinger Band. This strategy combines technical indicators and price action to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Dash shows a strong upward trend, particularly evident in the recent surge to $47.5 and the projected increase to $48.3. The RSI consistently moved above 50, with a peak of 73.1, indicating bullish momentum. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for further price movement. The support price of $38.1 provides a floor, while the resistance of $58.4 marks a potential ceiling. Combining these factors, I recommend a long position strategy. My strategy involves entering a long position at $41.3 with a stop-loss order set at $38.1, just below the support level. The initial target price is $45.8, aligning with the forecast for May 11, 2026. If the price surpasses $45.8, I will move the stop-loss to the entry price of $41.3 to secure profits and further extend the target price to $48.3, based on the forecast. This approach balances risk management with the potential for significant gains, capitalizing on the observed upward trend and leveraging the Bollinger Bands and RSI signals. Based on the historical data and forecast, Morpho exhibits a generally upward trend, fluctuating within a defined range between $1.96 support and $2.1 resistance. The RSI consistently hovers around 60, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands show periods of contraction and expansion, suggesting potential volatility. Considering the forecast prices, which are mostly around $2, and the recent price action near the $2 level, I propose a strategy focused on capitalizing on minor pullbacks while maintaining a bullish outlook. We will use a combination of RSI and Bollinger Bands to fine-tune our entries and exits. Specifically, I recommend a long position when the price touches the bottom of the Bollinger Bands, which is around $1.82, and the RSI dips slightly below 40. The entry price will be $1.82. The stop-loss should be set just below the bottom of the Bollinger Bands at $1.78 to protect against unexpected downside moves. The initial target price will be the resistance level of $2.1, aiming for a significant gain. If the price reaches $2.1, we will adjust the stop-loss to break even at $1.82 to secure the profit and potentially ride the trend further. If the price continues to rise, we can set a second target price at $2.2. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Celestia demonstrates a fluctuating trend with consistent support at $0.347. The RSI indicates that the asset is currently within a neutral range, fluctuating between 50 and 60. The Bollinger Bands show volatility, with the price occasionally touching the upper and lower bands. Considering the recent price action and the forecast, I recommend a cautious long position. The entry price should be $0.357, coinciding with the most recent forecast price and a slight bounce from the support level. A stop-loss order should be placed at $0.347, right at the support level, to limit potential losses. The target price for this trade is set at $0.361, aligning with the forecast for the next few days and a reasonable resistance level. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk. The RSI suggests the asset isn't overbought, allowing for further upward movement. The Bollinger Bands confirm the volatility and provide a range for potential price action. This portfolio is efficient because it leverages both RSI and Bollinger Bands to identify optimal entry and exit points, while the support and resistance levels provide further context for risk management. Based on the historical data and forecast, Ondo shows a clear upward trend. The price has been consistently moving higher, breaking through the resistance level of $0.284 and reaching $0.317. The forecast for the next week indicates further price increases, with the expected price reaching $0.333. The RSI is currently above 77, indicating an overbought condition, suggesting a potential pullback is possible, but the overall trend remains bullish. The Bollinger Bands are widening, indicating increased volatility and potential for further price movement. Given these factors, I propose a long position strategy to capitalize on the upward trend. My strategy involves a phased approach. First, I will enter a long position at $0.294, anticipating a continuation of the upward trend. I will set a stop loss at $0.279, just below the support level, to protect against a potential pullback. The initial target price will be $0.312, aligning with the forecast price for May 7, 2026. If the price reaches $0.312, I will move the stop loss to the entry price of $0.294 to secure profits. If the price continues to rise, I will adjust the target price to $0.333, the forecast high for May 11, 2026. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk. Based on the historical data and forecast, Layer 0 shows a downtrend. The RSI consistently remains below 50, indicating prevailing selling pressure, with readings frequently dipping below 30, signaling oversold conditions. The forecast for the next week predicts further decline, with prices consistently below $1.37. The Bollinger Bands confirm this downward trajectory, with the lower band consistently below the current price. Given this context, I recommend a short selling strategy. We will initiate a short position at $1.44. To mitigate risk, we will set a stop loss at $1.37, the established support level. The target price for this short position will be $1.27, aligning with the forecast price and the lower Bollinger Band. To refine this strategy, we will incorporate RSI signals. When the RSI reaches below 30, we will enter a short position. When the RSI reaches above 50, we will close the position. The portfolio will be 60% short selling, 30% RSI strategy, and 10% Bollinger Band strategy. This diversified approach aims to capitalize on the prevailing downtrend while mitigating potential losses through strategic stop-loss placement and target price adjustments. The combined strategy will provide a more robust and adaptable approach to trading Layer 0, maximizing potential returns while minimizing risk. Based on the historical data and forecast, World Liberty Financial demonstrates a clear downtrend. The price has been consistently declining from $0.079 to $0.0545, with the RSI consistently below 30, indicating oversold conditions. The forecast for the next week projects a continuation of this downtrend, with prices ranging from $0.062 to $0.0581. The Bollinger Bands also support this view, with the price consistently near the lower band. Therefore, I recommend a short position strategy. My strategy involves entering a short position at $0.062. Given the strong downtrend and oversold conditions, I will set a tight stop loss at $0.0641, just above the recent high. The initial target price will be $0.0545, coinciding with the support level. If the price reaches this level, I will reevaluate the situation. Considering the continued bearish momentum, I anticipate a further decline, and I will adjust the target price to $0.05 if the price hits the initial target. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Terra Luna Classic shows a clear upward trend. The price has consistently been making higher highs and higher lows, supported by the RSI mostly staying above 50 and often entering overbought territory, above 80. The forecast for the next week indicates continued upward momentum, with prices predicted to reach $0.000117. Considering the support price of $0.000999, we will implement a strategy focusing on capitalizing on pullbacks. Our primary strategy will be based on RSI, aiming to buy when the RSI dips below 30 and sell when it reaches 80. Specifically, we will enter a long position when the RSI falls below 30, set a stop loss slightly below the support price of $0.000999, and target a price of $0.000107, aligning with the forecast high. To refine our portfolio, we will incorporate Bollinger Bands to confirm our RSI signals. When the RSI dips below 30 and the price touches the lower Bollinger Band, it signals a strong buying opportunity. We will enter a long position at $0.000009, place a stop loss at $0.000095, and set a target price of $0.000107. This strategy combines the momentum of the RSI with the volatility indicator of the Bollinger Bands, providing a robust and efficient approach to maximize returns while managing risk. This will allow us to capture significant gains from the ongoing uptrend in Terra Luna Classic. Based on the historical data and forecast, Pendle shows a clear uptrend. The price has been consistently increasing, and the forecast for the next week predicts further growth. The RSI values are mostly above 50, with recent readings approaching overbought territory, above 70, indicating strong buying momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. Entry price should be set at $1.64. A stop-loss order should be placed at $1.58 to protect against potential downside risks. The target price should be set at $1.94, based on the forecast high for the week. To refine this strategy, we can incorporate RSI and Bollinger Band signals. When the RSI dips below 30, oversold, it signals a potential buying opportunity. When the RSI exceeds 70, overbought, it suggests a possible pullback. Additionally, when the price touches the lower Bollinger Band, it indicates a potential buying opportunity, while touching the upper band suggests a potential selling opportunity. Combining these signals, I recommend entering a long position at $1.64, setting a stop loss at $1.58, and targeting $1.94. This portfolio combines the trend analysis, RSI, and Bollinger Bands for a more robust and efficient strategy. Based on the historical data and forecast, Doge-Coin shows a clear upward trend. The RSI consistently fluctuates, dipping below 50 and reaching overbought levels above 70, indicating potential buying and selling opportunities. The Bollinger Bands have been widening, suggesting increased volatility and a potential for significant price movements. Considering the support price of 1.51 and a resistance price of 1.69, we will implement a combined strategy utilizing RSI and Bollinger Bands to maximize potential returns. Our strategy will involve a long position. We will enter a long position at $1.45 when the forecast price is at $1.45 and the RSI is below 50. The stop loss will be set at $1.40, just below the lower Bollinger Band. The initial target price will be $1.56, aligning with the upper Bollinger Band and approaching the support price of $1.51. If the price reaches $1.56, we will move the stop loss to the entry price of $1.45 to secure profits and manage risk. Further, if the price continues to rise, we will set a second target price at $1.63, coinciding with the forecast price and a resistance price of $1.69. This combined approach leverages both technical indicators and price levels to capitalize on the upward trend while mitigating potential losses.